Hi, good morning. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side, live and directly answered in our webinar. Today it's Thursday, 23rd of August 2018. Let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down. For example, also the key information documents. Since August 2018 in the European Union, there's a difference between retail clients and professional clients. Retail clients will have a maximum leverage for Forex majors up to 30. Professional clients, if they apply for that, can still get a higher leverage. More details about that and the differences between protection also to find on admiralmarkets.com. Yeah, what I said, ESMA, one of the topics of the year. A picture shows more than 1,000 words. If you traded before the new regulation DAX or euro dollar, you had a margin requirement of just, in this example, 24 euro. Now you see the new margin requirements up to 600 euro. Same for euro dollar. And if you're a professional trader and you apply for that, you can get still the higher leverage. There are some differences. Also, like said, retail clients have an unlimited protection against negative balances, and professional clients will have a protection up to 50,000 British pounds, what is around about 70,000 euro, via our negative balance protection policy. All details also here on admiralmarkets.com. The specific link you see displayed on your screen. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices, so my English made in Germany, but I'm not the main speaker. The main speaker is a day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, like today, it's Markus' day. On Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, many benefits only with us. For example, DAX 30 or also euro dollar, typically spread of just 0.8 points or pips during the main trading hours without any additional commission with our account time Admiral Markets. Also here, check all details out on admiralmarkets.com. Same like our contact details. And enough from my side. Now it's time for Markus. Hi, good morning, good day. What's your view to the markets today?
Wonderful. Good morning to everybody, ladies and gentlemen. Thanks for the introduction, Jens, this morning. So I transfer my screen. Yes, here is it. Well, welcome. I hope you had a great week up to now and up to today. So we want to prepare our next trading days, and we want to have a small look back what trades we did in the last days since our last webinar from last Thursday. But first, as always, the same procedure as every week. Look at the trading approach based on the Dow theory. Success, ladies and gentlemen, is not a fantasy, it's a formula. So the Dow theory says a trend continuation is more likely than a trend break. Here you can see the statistic value, a trend continuation around about 65%. And if the bigger trend is running in the same direction, it rises up to 72%. So with that statistically value and numbers, you have a great possibility to make trades and to make profit in your market. But that's one thing. The other side is you need rules. You every time need rules, and my rules you can see here. The first rule, you need a trend. No trend, no trade. That's a necessary thing. Valid trend is needed. Second rules, the correction has to run at least 38%. Rule number 3, the major of the trend, maximum the fourth trend arm. One movement, one correction is one arm, maximum 4 trend arms. Rules number 4, waiting for the rebound. You can see it if you use Heikin Ashi, like balance candle. We will see it in the market. And rule number 5, the Fibonacci gives you the target, red to red, blue to blue. It's really easy. I want to show you the rules, and we have a look at the last days. Since last Thursday, I did 3 trades with my expert advisor, and surprise, surprise, the expert advisor, the documentation and the English and the video is now available in English. So German and English as well. If you want to try the expert advisor for MetaTrader 4 at Admiral Markets, go into my homepage, dowhow-trading.com, under the button EA, you can order your test version for the EA. So 3 trades we did. First, we prepared it last week, US dollar. We want to do US dollar against Japanese yen. We want to make a long trend. Yes, we did, but we were stopped out here. That's a part of trading, but that was not the problem. The second trade we did in euro against Japanese yen. Here we are. You can see we had a trend. We had our correction rule number 2, 38%. Now we had here this balance candle here. We made our trade, and this was the part, red to red. Here was the target. Boom, winner. Next one was the same, New Zealand, Swiss franc, Japanese yen, the same. You had a trend, we had our correction, we made this trend, and after that we made a little bit deeper correction, but our stop were lying down below this 0.3. No problem. A trend continuation, ladies and gentlemen, is more likely than a trend break. That's the great stuff. Most of the people didn't make this experience because they are too nervous, too crazy. Oh, the price come back, I have to go out. No, trust the trend. That's the thing. So what was the result of the last week? You can see it here. Profit factor 2.37, and we make a good trade. We had a good week. So the same as the weeks before. So you can see it's not so money. That's so many trades, but that's no problem. We are profitable. That's our thing. And you can see it's a really calm trading approach. It's soft. It's not so many work you have to do. The only job what you have to do is prepare the bigger trend, and then in the signal trend, there you can make your trend. So we want to do the same this week, and I prepared some trading signals for you. We will start with Aussie Canadian dollar. Only short. You can see we have a downtrend actually. Let me paint for you. In this movement, correction, movement, correction, movement, correction, and now we're on the way to a trend continuation in the bigger trend. This is the leading trend in the daily chart. This is our support. We need the bigger money. We need the smart money to support us in our smaller trend. So this is the situation that you can say to your Aussie Canadian dollar in the hourly chart. Come on, give me a downtrend, and you can see we have a little bit downtrend, and we have to wait, but the expert advisor will do the rest. Next one, New Zealand dollar, Aussie New Zealand dollar, the same as last week, but we are waiting for a long trend because the trend is stable, is valid. Actually, we corrected down to 78%. We need a stabilization there, and then we can say to the Aussie New Zealand in the hourly chart, look at this one, look at the down and long trend, but not yet. We have to wait. And here you can see an interesting situation how the expert advisor works. You can see we had a trend, we had this we had this correction, and we had here our signal because there was a balance candle, but we had no entry because the price went back and didn't come out of the correction zone. So there was no entry, no deal, because the expert advisor says, if I have no deal during the next 4 candles, I will cancel the trade, I will cancel the deal. This is an automatic system, and you can see no loser. That's great. Aussie New Zealand, Aussie US dollar, long, short, you can see we have in daily chart a downtrend. We are in the correction. We bounced down here at 61% Fibonacci, and now we are on the way to a trend continuation. That's the situation I want to use for my hourly chart. And here I wait. You can see it's a downtrend, and now we are waiting for rule number 2, 38% at least correction, and then we can make a trade. Maybe tomorrow, maybe, I don't know, doesn't matter. The system works for me. DAX, Jesus Christ, DAX, oh, ugly situation, very terrible, but you can see it's more short than long. So the bigger trend you can see is short, and you can see this one, movement, correction, movement, and now we are in the correction. We have a little bit space as long as we doesn't leave the correction zone to the above. The trend continuation is more likely. So this is the situation in daily chart, and this is the point why I'm looking for a short trend in the hourly chart. Not yet, because it's facing down upwards at the moment, but this is the correction you could see in the daily chart. It's how should I say, the time frame is not really important. The trends are important. That is what you have to see and what you have to learn. So now we have to wait if we will have a downtrend. And you can see, if I say to my expert advisor, please only short, he recognized the signals long, but he doesn't make a trade, or he doesn't make a trend, a deal, because I said only short. So this is a great stuff. Next one, Euro Canadian dollar. You can see only short. Why? It's a downtrend. We are in the correction, and as long as we doesn't leave the zone to the upper side, a trend continuation is more likely than a trend break, actually. So I'm looking for a downtrend in the Euro Canadian dollar in the hourly chart. Put it on your watch list, maybe during the next days. Euro, Swiss franc, short as well. Downtrend, a little bit in a correction. Today, you can see this balance candle. It means there is a rebound. We are in the correction. Maybe the price is going down. And so you have to look for the hourly chart, short. So now we are in the move. The trade is valid already. The next correction, there will be our chance. Put it on your watch list, Euro, Swiss franc. The same as last week, European against British pound. Oh, he is running a trade. Yes, we said last week long, because we have an uptrend. We were in the correction. You could see a trend continuation is more likely than a trend break, actually. And this is my only running trade, actually, in Europe. British pound, and you see this is how the price works. The EA works. Movement, correction, it's automatically. No job for me. Only the job to figure out in which direction the upper trend is running. And here you could see this was the candle, the balance candle, small body, long tails on the upper and the lower side, and here was my entry. Actually, I love Admiral Markets because there's no difference. I can go inside the market wherever I want. It's a great stuff from Admiral Markets. And you can see now we are on track to my target. My target lies at where we are. So yes, here green to green. So in this point, and now we are on track to our target. So we will see next week what will the result of the Euro British pound. So Euro Japanese yen, it's still long, because we have here this support zone, and actually we are on the track on the long side, and you can see it's a little bit major, this trend. So maybe I think it's not the best situation, and I think we put it out of our leave it from our watch list for this week. Now, New Zealand Swiss franc, it's short. You can see correction on track on a trend to a trend continuation. Look at the hourly chart. Here we have our downtrend. The next correction maybe will bring our signal, but it's a chart for our watch list. New Zealand dollar, Swiss franc. The same in no, that's not. That was the old one from last week. I want to show you our trade. So next one, and at least US dollar, Japanese yen. because the trend is facing upwards. You can see it. So this one, you can see the big trend, and of course this one, you see movement, correction, movement, and now in the correction, and as long as it doesn't leave this zone to the lower side, a trend continuation is more likely than a trend break. So this is the reason why I'm looking for long. You can see there is, here we are, an uptrend, and the next correction, I hope so. It's not safe. It's only probabilities. The next correction will show us maybe a signal, and if not, we won't die about that. But it's only probabilities. So at the end, could you please quickly show the first slide with the rules? Of course. It's always your time for 1 hour, mostly. In my education service, we made day trading as well. In the hourly chart is the bigger trend. In 5 minutes, we make our trades. So Tuesday, Wednesday, and Thursday, we make day trading. And during the week, we make hourly chart. And we make volume and order book trading in the book map for the scalper. It's everything. And yes, I had a little bit time, only for around about 5 hours. So we can have a look at the S&P 500 for a market in general. Or let's start with gold. And here we start in the hourly chart. Where is it? So this one. So gold, it's really difficult because we have a strong dollar, and this is not so good for gold. And you can see we are almost to break this down, this uptrend at the moment. Maybe we get a stabilization here, but it's not a really great stuff because you have this big down move in daily, and now it's a normal case that we have a let's see that we have a correction after this big move. It is sharply decreasing downside, and now we have a little bit correction. And today you can see it's a balance candle. Maybe this is the signal to get lower prices. So I wouldn't make a long trade. So I would wait if you have a short trade to make in the direction of the bigger trend. Euro, US dollar, yes, of course, we can make it, no problem. Euro, it's maybe the same as the hourly chart. Come in. As in the gold, let's see. Short. You can see, and we have in the hourly, let's first the daily chart. So you can see we have a downtrend. We are very strong in the correction, but it doesn't matter. It's a downtrend. So we have a little bit space to the upper side to 1.70 roundabout. And as long as the price doesn't leave this zone to the upper side, the trend continuation to the long side, to the short side is more likely than a trend break. So wait, have a little bit patient and wait for a downtrend in the hourly chart, and then we can make a trend in the direction of the daily chart. So this was my view. I want to show you the rules again. This was what you want to see. That's not the right one. Let me see. Where is my presentation? Here is it. So just a moment, just a second, just a moment. Here we are. And presentation, here we are. So there is the rules. So that's my last words. I hope you will have a grateful and successful trading week. And next week, we will see on Thursday next week. I think we have a great stuff here with Admiral, and you can see we made good trades. We have our losers. It's a part of trading, but at least we have a very successful trading approach. And if you want to have more information, my homepage is still there. And if you want to trade, if you have to trade about the expert advisor, make it, and yes, can you send me a require? So this is the rules, and this I wish you a wonderful day and the rest of your week. And with that words, back to Jens.
Tomorrow is another day. Tomorrow to the same time. We have 5 days a week, 5 different traders. So tomorrow is the day trader of today. And if you'd like to see and watch that again, what we had right now in this webinar, a couple of hours later, it will be available on our YouTube channel, youtube.com/. Admiral Markets FX, and you can see it as often as you want. Thanks to Markus. Greetings from Berlin office. All the time good trades, and maybe we see us tomorrow again. Bye bye.